This is Tom Aspray with the Viper Report market video for October 4th, and exciting to look at the new fourth quarter pivots. I spend a lot of time talking about pivots, monthly, weekly, and even quarterly. Basic rules of pivot analysis, and we have several videos up on YouTube about it, is that if the market is above its pivot level, whatever time frame, that's positive. If it drops back below it, that's negative. And then you can derive certain levels of resistance based on that pivot level. So this is a chart of the leverage TQQQ from early 23. You can see we started off the year below this purple line, which is the quarterly pivot. We moved up here above the Stark band and also touched the R2 here, pulled back, started the next quarter off above its quarterly pivot. So basically, you were long from this point. Had a couple of warning signs here above the Stark bands, came back down and tested the quarterly pivot here, but did not close below it rather, but then closed below it there. And then in 23, after the October sell-off, moved back above the pivot for the next push to the upside. Quarterly pivots have the advantage that they're good for the entire quarter. So they'll act as support or resistance depending on whether they're above or below it. So if you'd like a copy of the current Viper ETF pivot levels, you can go to the Viper Report, hit on that link, and then at the bottom of the page you'll see this link to the T&J's ETF Watchlist. And that's what it'll look like. And then if you so desire, you can print it or download it. And you'll also see that at this point in time, 82.3% of the ETFs that I follow, about 120 of them, closed above their quarterly pivot. So that's a bullish sign. You can see some of the sell signals were in biotech, mostly in healthcare all last week. Vanguard Healthcare and also XBI and XLV. On the plus side, we had mostly energy here. XOP, PSE, TBT, which is the based on rates moving higher, USO, VDE, XLE, and UUP, the dollar. We're a little ahead of schedule, but while I got it up on the screen, growth gauge is still leading, but value picked up this week, so 100% of them, are positive based on the weekly and the quarter. 70% are positive based on the growth gauge. You can see XLK and VGT, are still negative, and of course XLV flipped this week. Some promising signs here in the daily as of Friday, so that'll be important to watch in the week ahead. So if you're looking at ETF and you're looking for a decline, check out where the quarterly pivot level is. And of course, if you have any questions, you can reach me at tom@viperreport.com. Markets are still strong. Had a setback, and then of course another rocket to the upside, pushing the averages to further new highs for the week. Super strong jobs report, so recessionary fears have diminished for a while, but don't worry, the market bears will think of some reason to convince you not to buy stocks. Of course, that's not what we've been saying pretty much since the early 2023. So S&P AD line, turned down a little bit last week. So, it could pull back either to that low or to its rising moving average, though more likely, given the time length, that might be after the election. What these AD lines do show, and I'll be updating an article I wrote a few years ago that talks about how, you can use the AD line analysis to determine whether the market's going to be strong or weak after the election. Obviously, it doesn't tell you who, but so going back to like 2008, the AD lines were all below their moving averages. We were in a bear market, no surprise. And so, that was negative for the next 3 months after the election. And of course, the markets bottomed out in March of 2009. 2012, AD lines positive going into the election. 2016 positive, 2020 positive, and these moving averages are unlikely to be broken. And if they're still positive in another couple of weeks, very unlikely. And they suggest a very positive trend, as do a number of the other market indicators. So the stocks only here, also positive. They all turned down a little bit, but once again, followers the AD line else, when they're rising strongly like that, it's a very bullish sign. QQQ also looks positive. It was only fractionally higher last week, like 0.12%, but still a positive pattern in the AD line. RS is still below its moving average, and the daily looks a little bit better. So, once again, for those of you maybe new to my stuff, if the RS is declining, that means you should be in the S&P, not the Qs. When it's rising, you should be in the Qs, not the S&P. They both will go up, just the rate of change. Daily AD lines also look strong here. You can see we had a little pullback right to the 20-day EMA. That's that red line. Held above the pivots here at 562.09 and pushed to the upside. So potential targets, there are a lot of fib targets around 580, and then the R1 at 586.38. S&P AD line, it's encouraging that it turned up. That'll be supported by positive AD numbers, during the day on Monday. One of the things we teach for the AD line course is to keep track of those numbers, monitor them, so you have an idea, particularly if you're going to take a speculative position, whether buying calls or buying puts. You want to see what the AD line is telling you. If you're buying calls, you don't want to see the negative AD lines on that day. Means you can probably wait a day or two and get a better fill. NYSE Composite, new low highs, picked up a little bit up to 169. More importantly, we still have a low number of stocks making new lows. It's really a mouthful. So that's still a positive for the overall outlook. If we look at the NASDAQ Composite, we see a similar nice pickup in the new highs on the NASDAQ. Still, you don't want to see the new lows get much above 220 here, so that's still a good sign. Also, the AD numbers were pretty encouraging on Friday. See these panels we talked about before. So 42.8% of the S&P stocks were higher on Friday. Were advancing. Okay, not a bad number, but it's better that the small cap here and the 1500 small, mid, and large caps were at 56.20, and then the QQQs were at 64. So that all suggests, some substantial buying. And, on a really short-term basis, this kind of pattern here going into last week's sell-off was just a sign that, we needed to pull back before we could move higher. Not a lot of new evidence for the growth value analysis. You can see that the ratio of these two, remember, when it's rising, growth is leading. When it's declining, value is leading. It moved just above its moving average last couple of weeks, but closed right on it. So still, a little bit of a coin flip, though overall slightly positive action. For those of you who are reading some of the latest bearish commentary on the market, this might give you pause. This is the SPXS. That's the triple leveraged S&P Bear Fund. Not much positive about this. You're below the 20-day EMA, which is declining, and the OBV has made a new low. So, it could bounce certainly, but is a negative pattern. The VIX and VXN, are above their short-term moving averages. Should we get a sharp sell-off early in the week, and we see, the VIX, for example, move up, above, say, 24, that would suggest a new uptrend in the VIX, which would be a short-term negative for stocks. The VXN, which measures the volatility, on the QQQ, is right at its resistance. We did take a position in the small cap, the IJR, last week for the Viper ETF. You can see it formed a doji right at the pivot. So that's a pretty good sign, except it formed a doji too on Friday, it was up 1.5%. So, the small cap market has been driving everybody nuts for a good part of the year. Haven't taken a position recently, but this sort of formation, we held above the pivot on this pullback, so that's a good sign. This is the S&P 600 AD line, so it's back above its moving average. And what you really want to see is a close above this 118.18 level, for an all clear. Those bulls on the small caps are going to be right one of these days. Of course, the earnings season starts to kick off next week, so that'll be interesting to see how that does. You can see that consumer credit, a bunch of the Fed governors are speaking early in the week, and wholesale inventories, etc., etc. This is their time to talk. Consumer price index, of course, is the big number on Thursday. Very favorable numbers in the PCE, so that's a good thing. Consumer price index, given the last data, is likely to be positive, supporting the downtrend in inflation. Same with the CPI. Plus, we get a preliminary reading on consumer sentiment. To our full ETF report review, you can see this is a chart of the triple leveraged long S&P. Nice pullback right in here to the 20-day EMA and close strong. Nice gain on the day. This reiterates what we talked about on the last page, 90% above their quarterly pivots for the growth. And and pretty much all the long. Here's our table. Interesting stuff. The most striking development, we mentioned it last week, that the XLE had gone from 16.7 on the 20th to 50. So that was a key level. This week shot to 100 based on the war in the Gulf. And, those are always tricky, because things go up very fast, just like they did because of the Chinese government's effort to support their stock market. But this does suggest a change in the trend for crude oil and the energy stocks. But we sure are likely to see, and hopefully we'll see a ceasefire. We'll see some sort of pullback in crude, but odds are getting better. The energy ETFs have bottomed. Not much really negative. XLP looks the weakest. Went from 58.3 to 25. You can see, they had a great run. We were long some of the XLP components. And you go way back to when it was at 50, and that was in July. So also XLV really got hit, 58.3 to 33. Longer term, the charts were getting down towards some pretty important support, so I'll be watching it. And then XLRE also took a hit, went from 83 to 41. We had some long positions in the Viper Hot Stocks and a couple of the REITs that had like 8 to 12% gainers, but we're out of those. So, for the week, there were a number of ETFs that outperformed the SPY. That means they had positive relative strength. 6.9%, not a slash, in XLE. And both XLF and XLU were up 1.1%. And you can see, some of the leaders from last month. XLY was down 1.3. XLB was also hit. And as you noted, XLRE was down 1.7%. Looking what I call the sector ETF. So we had a weekly ETFs. We talked about XLV, positive in XLV, positive XLE, XOP, and a 3-day positive. We still got some red down here in the XLK, SMH, and SOXL that were long SMH. And the DTS on XLK flipped on Friday. So some signs of green here. The progression is, goes from, 1 hour to 4 to DTS. So, maybe we'll get a rebound in some of those, but I would wait for firmer evidence. These are some of the holdings in the Viper ETF report. Value, VTV, had nice close. KRE, we got stopped out of that in here, so it was gapped higher, so that was a good sign. XLC, still one of our favorites. Looks like it's on here twice. Qs had acted well. XLF, you can see this nice gap higher and a strong close of up 1.7%. Gold, we're still on multiple positions. We kind of had a profit-taking target at, I think, 249 plus. ITB, the home builders, I'll have more of those in Monday's reports. Before we call it today, let's look at the sector report here. Some energy, as I said earlier, up to 100%. Lots of green here, across the board. EOG, weekly and daily is also 3 days. And for Marathon, Valero had a 3 DTS, but still negative based on the weekly, and is still below its quarterly pivot. Materials, we can see a fair amount of red. We noticed it was down. So, now it becomes a point, do they hold? Overall chart pattern looks pretty good for XLB. So, we start to see, these daily go into 3 days, that'd be more of a negative. Industrials, generally positive, 83.3%, and as the materials is too. Consumer discretionary, 83.3%. TJ Maxx, red. AZO, which was one of the auto parts things, flashed all red. Orly is still positive. So down in healthcare, healthcare and consumer staples obviously look the worst. On the bright side in the financials, Wells Fargo, Bank of America, and JPM, all have daily DTS signals. Information technology, NVIDIA and Broadcom are both positive DTS. Communication services, sort of a mixed bag. And also, so real utility, 75%, same sort of thing. A couple of 3 DTS and Duke and AEP. So we'll see how those turn out. And real estate, much more red, you can see here. So, that cycle may take a while before they come back into favor. But that's what these, the watch lists and the great programming of Jerry helps you give you an idea of when a trend is changing either up or down. A quick look at some of the stock holdings. One of our big winners, UNM Corp Group. It's a life insurance company. We unfortunately took a little off right, I think, around in here, and then it was up 3.8% on Friday alone. So we're still riding that. Fortinet also is in a tight range, but it was up 1 1/3 on Friday. So we think there's a good chance we're going to see a sharp move to the upside. It hasn't really corrected when the market's gone; it's just held firm. Dave & Buster's formed a weekly bullish doji buy signal way back in here. We're just sitting at it, and it was up 7% on Friday, so that was good. Broadcom we like. CTS really hasn't done much, but the technicals are positive. WR Berkeley, also another insurance play. We just recommended that and had a nice Friday. And Virtue Financial also gapped higher, and so looks promising. So that's all I got for this week. As always, send me comments, questions, complaints to Tom at Viper Report. If you want the ETF quarterly pivots, here you go right here. Also, if you search under Forbes, I've written a bunch of articles on quarterly and actually yearly pivots. And of course, if you want to subscribe to either the publications or talk to us about mentoring, we're generally around. Hope you have a good week. Take care.